Welcome to the Nighthawk webinar, Why We Pass on This Deal. And the reason we're doing this is we want to help you make better investments decisions. And what you're going to learn on this webinar is really how to better understand investment opportunities. How to better understand investment opportunities like multifamily syndications, and how to do better due diligence on these properties, right? So when you're investing in syndications, what kind of questions do you ask? What do you look for? And really, how do you discern good operators from the not so good operators, right? It's really dependent. The devil's always in the details, because I can make my returns be 20+%. But the question is, what is behind those assumptions? And that's what we're going to show you right now. We're going to show you in the form of a case study, a deal that we had almost had on a contract when we were going to basically start raising capital for it once we had it on a contract, but we discovered issues during due diligence that we didn't like. And this is really challenging because, gosh, we haven't done a deal in 18 months. It's not for lack of trying. We couldn't find a deal. So when we got this deal, we were very excited, and we went out there and took a bunch of pictures, and we're really excited. And then the team went over there and discovered things that we didn't like. And we're going to share those with you. And it took a lot of discipline to pass on this deal, because, man, we really wanted this deal, And so we really want to show you what's going on behind the scenes. We're going to show you kind of what the positioning was in the deal, why we liked it, what some of the high points were. But then we're also going to show you some of the due diligence items that we found and what we did about it, and to try to get into the deal. And so I just want to show you, from our perspective, behind the scenes, how you evaluate these opportunities. Because I find a lot of past investors, they got into syndications, and I'm shocked at how few people sometimes ask questions. You got to ask questions. You have to be a discerning investor. You have to ask questions. You don't have to be an expert, but you got to ask questions, and you got to find the right operator. So we want to show you that we are the right operator. We'd love to earn your trust. We have some upcoming opportunities we'd love to share with you. So we've decided to give you a behind-the-scenes look at a deal that never went live, so that to help you make better investment decisions as well. So let's get started with a little bit of background on this deal. Drew, let's go to the next slide. And really, this is the team I want to introduce you. My name is Michael Blanc. I'm the founder of Nighthawk Equity. Started this thing. I got started with real estate investing and full-time entrepreneurship in 2005, flipped a bunch of houses, had restaurants, did some stocks and options, did a bunch of stuff, and then kind of got into 2011, and then founded Nighthawk Equity to really kind of scale up this portfolio. And so my partners are Garrett Lynch and Drew Niffen, and together we have over 34 years of experience in this business, and together we've done 21 deals. It's really cool. Built a portfolio valued over $350 million. And to do that, we've raised over $85 million. Find is that we're one of the true operators. It's one of the things that's a little different about us. A lot of people out there in syndications raising capital for someone else. We're not one of those people. We actually operate our assets. We have literally an in-house construction team, in-house asset management team, and all those things. So that's how we're a little bit different. Now, onto this deal a little bit. One of the things that we have is we have a lot of economies of scale in the Atlanta market, is where most of our portfolio is. We have a lot of scale and depth. And what this means is that we have lots of knowledge and experience in the market. So we have for the market, what's going in, what's going on, what some of the rentals are, the rents are. We have an established team of contractors and subcontractors, right, that we've used over and over again. And now we have a track record with our property manager. This really helps us getting into a new deal. And really, because of that track record, really makes us feel very confident about a deal, either because we're going to move forward, or because today we're going to show you a deal where we did not move forward. But next week on the 20th, we actually have a webinar on a deal we are moving forward. We actually went through due diligence. We all met there last week. Really excited about this deal. We'll share that with you later on. Love to have you on that webinar next week. And so you kind of get a contrast of some things that we like, and then sometimes we did not like as well. So one of the things that we like about the Atlanta market is, number one, is housing affordability. And there was an article actually in the Wall Street Journal just yesterday about how Atlanta is attracting like Hollywood. They call it Y'allywood. Y'all, get it? Y'allywood. Literally, that's what in the Wall Street Journal. Super like serious kind of publication, because it's been attracting so much film to the area. But at the same time, it's affordable relative to areas like New York City, San Francisco, or LA. So these guys are like, man, I can live like a freaking king in Atlanta. So it's attracting a lot of population growth into the area. And so it's attracting a lot of out of state, and it's going to continue attracting more tenants and buyers in this house because of the increased number of remote workers, right? COVID really kind of brought that to light. Hey, I can actually live anywhere. I don't have to live in New York City and pay $5,000 a month for it. I can actually live in a high quality area like Atlanta, actually have a much higher quality of life and a lower cost of living. There's a lot of businesses in Atlanta, a lot of diversification. Atlanta airport is literally the busiest in the world. It's amazing. And I go there a lot, and I don't know how they do it, but it seems like the most efficient airport as well. So there's a lot of things going for it in the Atlanta market, which is why we like it. So Drew, talk about some of the investment highlights, right? That we were going to essentially, that we really liked about this deal that we were going to sell until we did due diligence. But what did we really like at this deal moving into it?
Sure. Thanks, Michael. So yeah, there's a lot of things that we're looking for on our deals, and we're going to underwrite our deals very carefully to them. So we want to be able to say to our investors with confidence that we believe that these deals can be the kind of things that we would invest our own money in, and that has a lot of what we call forced appreciation. So obviously the markets are complex. We want to do as much as we can to control our destiny and increase the likelihood that we can deliver upon the deal that we forecast through forced appreciation. So that normally involves taking an asset that is somewhat older and is a little bit tired and injecting capital into it to make it a better place to live. And that involves improving the external envelope of the property, its aesthetics, its curb appeal, adding amenities, and then obviously the units as well. And so when you're able to do all of that, we want to find properties that meet something like a 15% rate of return for investors over the life of the hold. And on something like a 5-year hold, that's going to give you about a doubling of your money. But we don't just want it to be through appreciation being forced, but along the way, we want to be able to give cash distributions to investors so that they're getting a regular distribution of funds to them. So we're looking for something that has that 15% rate of return, as well as a 5% cash on cash return. As I mentioned, the next thing is the age of the asset, right? So we want something that's got a little bit of age on it, because usually that presents the opportunity to update it, modernize it, and make it better. This property that we're looking at, the subject property on this deal, was built in 1988, and out of all of its units, about half of them were classic, which means that they hadn't been renovated, hadn't been updated for a while, and they were prime for some capital going into them. Next thing is the basis, right? So that's your going in price on the asset. And obviously, usually you make money on the purchase, right? So we wanted to have a property that had a fairly low basis. And this property met that criteria. When you compared it to other properties that had traded hands in like the last year, you find that it was about 40% below sales comps. Now that's possible nowadays because 24 months ago, prices were at an all-time high, right? So there's a lot of property since then. There's been a pullback in the market, and we wanted to strike with this deal and get that price significantly below the sales comps. And then lastly, the floor plans. So one of the things that you'll see in this market is that people are attracted to larger floor plans. There's a whole work from home movement. And so this was very attractive for those reasons as well. So this property had a lot of things going into it that made us excited about what it could be, made us put it under letter of intent, start spending money as partners right here to review the asset and make sure that it's the kind of thing that's actually exciting for you, our investors. So here's just some pictures kind of showing before and after of what these deals look like. If you look at the left column, you have kind of the current units, and over on the right, you have post renovation. So this is not this property per se, because obviously we didn't buy it, but these are the kind of renovations that we're doing on our properties to add value to them. You can see here too that the rents, obviously the point of these things is not merely to make the units nicer, but in turn to increase the rent. So if you can take the rents like you see here, going from $1,300 to $1,500, that's $200. And then you apply that over 12 months, you get the 2,400. I'm rounding here. And then you take that 2,400, take it across 100 units on a property. And then you take that applied to a cap rate. That is the math for how you're creating millions of dollars in value over these properties.
Since then, we actually found another deal. Again, we've looked at another 85 deals since this particular deal, and we love this deal. It actually went through due diligence, so we're moving forward with it. And we're starting to see some opportunity. We've been talking about these buying opportunities for a while. And if you're interested in investing in multifamily passively, we'd love to have a conversation with you on Nighthawk Equity. Head on over to nighthawkequity.com and just click the join button, schedule a call with us, and we're happy to share with you some of our upcoming opportunities. So again, why is this important, right? If you're a passive investor, we wanted to help you make better investment opportunities. You don't have to be an expert in multifamily syndications, but you have to know how to do better due diligence on the deal itself and ask the right questions and pick the right operator as well. And if you're an active investor, right, it's very important that you stick to due diligence rules and that you don't cut corners. And your desire to do a deal is so strong that you end up doing a bad deal. So hopefully you found this episode useful, regardless of whether you're active or passive investors. We're here to help you become financially free with real estate. Catch you next time.